This chapter introduces the perpetual inventory system. So to explain what it is, let's just take an example. So at any time of any day, a trading firm needs to know exactly how many units of inventory it has. So just taking an example, you take this new book out, Sea of Tranquility by Emily St. John Mandel. This is a bookshop called Cook & Young. And what it says here is you can look this up on the internet. So we're looking at it from the customer facing perspective, but internally at this business, they would also have a computer which would have details about how many of those books they have and where they are. Now, what we can see over here is it says this is $24.99, available stock 7. And if you click on this click and collect button, it will actually tell you which stores that has it at. There's none at Southland. So if you wanted to get it at Southland, you need to get a transfer required. There's 6 in GC, which is Geelong, and there's 1 in Camberwell. So that's like eyes on the inventory every second of every day. As soon as someone buys one, these figures will update. Or maybe they buy the Cook & Young purchases more, these figures will update. You can also look at JB HiFi. Think about all the different things JB HiFi sells, all the different units of stock. So take this new game here called Star Wars The Skywalker Saga on PS5. $79. But again, where do you want to buy it from? And think about all the JB Hi-Fi across Australia. Just put in your postcode and it says, these are all the stores near you. Here's what they have. So Camberwell, where I live, unavailable. So you can't get it there. So I would have to go to Victoria Gardens or Paran or Chadstone. So that's really useful information. But our topic is, well, how do they actually know that? We just take it for granted as customers now. We click on a button and it tells us where inventory is. But yeah, that's what the perpetual inventory system is. So to understand it, well, the word perpetual is probably not a word you use a lot. So what does that actually mean? The definition of perpetual, it means continuing or continued without intermission or interruption. It is ceaseless. And that's actually really useful because if we say what the perpetual inventory system is, let's break it down into 3 things and say, first of all, yeah, it's perpetual. What does that mean? It means it's a system of recording inventory that never stops. It records movements of inventory continuously and without ceasing as they occur in brackets. So as soon as something happens with inventory, our records update. Second feature is it uses inventory cards to record these continual movements of inventory, and we'll look at what they are. And lastly, the third feature is at the end of the period, a physical inventory count is done to determine if any inventory was lost or gained during the period, and that will also be a separate topic later we'll look at in another video. Let's just go through those 3 features though. So we said the first feature is it's perpetual, it's continuous, it's never ceasing. So let's say we open the store at 9 AM and at 9:03 there's a sale of inventory. Well, the records update immediately, instantaneously on the computers. 9:04 there's another sale. Let's say we're selling that Lego Star Wars game. And yeah, it updates automatically. 9:07 someone comes in and buys one. Well, now it updates automatically. Maybe at 9:11 we go, well, we're getting close to running out now, so we better buy some more. So our records update. And then at 9:13 we sell another one. The important thing to realize is that any second of any day, the business always knows how many units it has of each line of inventory, how many were sold today, how many the business needs to buy, and when we need to buy them. So it's very, very useful. How are these movements of inventory tracked instantaneously in a practical sense? Well, many, many years ago, it used to be by hand, and we'll do it by hand in our subject just to learn. But obviously it's done by barcode now. It's all barcode scanners and technology. That's how we keep up to date. Second feature of the perpetual inventory system is it uses inventory cards to record these continual movements of inventory. So here's an example of an inventory card. It's a subsidiary record used to record all the transactions involving the movement of a particular line of inventory. So we can see here, just made one up. This is for the, let's say we're JB Hi-Fi. This is for the iPhone 13. And it shows all the balance of inventory, how many we have. It also shows the units that come into the business. So there's many ways inventory could come in. We'll deal with that later. Or the units that go out of the business. And, that could be sales, but it could be other things. We'll deal with that later. But for now, we'll just say perpetual inventory system uses these things called inventory cards. Our third feature is at the end of the period, a physical inventory count is done to determine if any inventory was lost or gained during the period. And again, we'll deal with this separately. But for now, we'll just say, look, at the end of the period, the inventory card will show how many units there should be of each item. So we take this iPhone, there should be 2 and 6. That's a total of 8. But then at the end of the period, we actually probably better count to make sure they're all there. And we do an inventory count. That's a physical count of the number of units of each line of inventory on hand. You might also see the word stock take. That's probably used more in the real world. We say stock take, but we're going to use inventory count. And let's say we do count them up, and there's only 1, 2, 3, 4, 5. There's only 7 iPhones there. Well, we're missing one. and now we need to account for that, which we'll deal with later. And lastly, we'll say, well, what are the advantages and disadvantages of the perpetual inventory system? The advantages are we've got greater inventory control because we know exactly how much we have of everything at any one time. So we can make better decisions about when to reorder, how many, etc. Even better, we can identify what sells well and what doesn't sell. So that, like that Star Wars game, is it selling or should we stock a different type of video game? And that's because we can check its inventory card. Thirdly, reordering is very efficient because we can set the computer to say, well, once the balance gets to a set reorder point, for example 5, we automatically reorder more inventory. So the inventory card enables us to do that. And lastly, we'll deal with this as a topic later, but we can identify how much inventory we should have and then actually count with an inventory count how much we have and identify if we've lost any or if we've gained any. However, on the other side, there are some disadvantages. There's higher costs, staff training and technology required. So to me, they're probably all the same thing, really. Our books sort of list them separately. But to implement this, you need more people and equipment. You've got to train those people, but all the technology required to do this, it's not easy, it's not simple. It requires expensive technology to constantly 24/7 be monitoring all these transactions of inventory, and not every business can afford that.